Today, we'll look into the classic investing book, The Intelligent Investor by Benjamin Graham. Many investors consider this a masterpiece and also refer to it as the investing Bible. We will explore why we need to look at this from a fresh perspective and what has changed today that could make this book outdated. Imagine you're driving a vintage car on a busy highway. It's classic and looks beautiful, but it can't make up for all the software present in modern cars. Similarly, the intelligent investor is a valuable guide, but there are many reasons why it is hard to fit in today's investment world. Let's look at the top 4 reasons. Over the last 100 years, stock markets have changed a lot. Graham's strategies were developed in a time when telephone and television were considered a luxury. But today, access to information is democratized. Most market participants are on a level playing field, including retail investors. In today's world, the stock market prices in news and events that are expected to happen much later in time. Sometimes these could be months or years ahead of time. This makes stock markets and stock market valuations very dynamic. Back in Graham's days, the world was a very different place and stock prices came in what was called as ticker tapes. I wonder how many of us can even imagine what it would look like. Graham likes to focus on what he calls as tangible assets. These could be buildings, machinery, or the raw material that the company has. But today, companies thrive on what can be called as intangible assets. Now, these could be patents, software, brand value, or any intellectual property. It is easy to measure the value of financial assets on your balance sheet, but how would one measure the value of data? Data that can predict consumer demand. What about innovation? What about innovation that can actually create completely new markets and drive consumer behavior? The intelligent investor stressed the importance of rational decision making, but we now know that emotions and biases play a big role. In recent years, behavioral finance and psychology have shed more light on many cognitive biases. These biases, driven by our emotions, can influence investment decisions. We have learned that even the most disciplined investors can be prone to biases and misjudgments when things go bad. So, while the intelligent investor lays a strong foundation, it is important to complement that with emotional intelligence and behavioral finance. Graham's book mainly covered the US market at a time when there was no globalization. But today, the investing landscape is global. Today, economic events and news from around the world has the potential to impact our investments. India and China are much bigger economies today than what it was 100 years ago. Companies have gone global and supply chains are interlinked. Well, no doubt the intelligent investor provides a valuable foundation, but it's crucial to adapt its principles to today's realities. As new investors, we should blend both traditional wisdom with the technology and globalization. It's like driving a vintage car with the latest software. In other words, combining the best of both worlds. So that was our analysis on why the intelligent investor may need a new perspective. Remember, as you start your investment journey, take inspiration from the classics, but always adapt them to the world we live in today. Thanks for watching and see you in the next video.